Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Bonds climb alongside the yen as equities tumble after a record-breaking rally pushed prices to exuberant levels. Asian indexes falling as investors question chipmakers' market value and lofty tech valuations. How deep could this equity slump go? Bruno, CEO of Natixis APAC Corporate and Investment Banking, will be sharing his view. And for insight into stretched tech valuations, even among Asian startups, we're joined by Avenir Growth Capital founder Sugrue. Before we get to the markets, let's head straight to New York, where Democratic nominee Zohran Mamdani has won the race to be the city's next mayor, and that's according to the Associated Press. His campaign, promising to tax the rich and make the city more affordable, resonating with voters and alarming Wall Street. It completes a winning day for the Democrats, who also secured the governor's mansions in Virginia and New Jersey. Let's bring in Bloomberg's Julie Fine. Julie, when it comes to New York, this is a historic win. He's all of 34, a Democratic socialist.
It is a historic win, and it is one that will be discussed for some time. It is historic in many ways. I mean, coming into this race months ago, many people had not even heard the name Zohran Mamdani. He will now be the mayor of this very well-known city in the United States of America. It also signals an end to Andrew Cuomo, who obviously very well-known, had the backing of President Trump. That did not put him near over the edge in this race. Mamdani winning by more than 10 points as of now. It'll be interesting to see how Wall Street reacts now that he certainly has this job. No question about it anymore, and how New York responds moving forward.
What will it mean for New York? What changes will he bring? What can be expected?
Well, I mean, he's discussed certain things like grocery stores, taxing the rich, doing things cheaper. He has these ideas, but we also have to remember, of course, there is a legislature. So having an idea and getting them through, they're two very different things. He will have his work cut out for him, but certainly people that voted for him have very high expectations.
You know, it's not just about New York. We saw wins for the Democrats in New Jersey, in Virginia. I'm just wondering, what will this mean for Trump?
Well, what is interesting is he did endorse Andrew Cuomo. Andrew Cuomo did not win. However, it was an 11th hour endorsement. It wasn't like he was in very early campaigning for him. Two Democratic governors, they won tonight, and they won by pretty large margins. That's something that Democrats will have to pay attention to. However, many candidates on the trail now will be asked questions about Mamdani. Do they agree with him? He has come right out and said he has socialist policies. So a lot of Democratic candidates will be asked about this in the future moving forward.
Julie, as we speak, we're showing live pictures in New York, a Mamdani rally that's happening right now. You got to imagine how Trump would react as well, right, Julie? He's talked about how he may respond if Mamdani were to win.
Well, I mean, he made it very clear he did not want Mamdani to win. However, Mamdani has won, and we are talking about a local entity versus a federal entity. But yes, he will definitely have words on this tomorrow. Mamdani, of course, has said that he is not intimidated in this situation. But again, you need federal funding for certain things. If you want to make certain things free, or if you want to offer certain programs, that's not just all done locally. So he will have some reliance on federal funding. The question really is if President Trump will say, okay, we don't even want to make that available to you right now because we don't like your policies.
And for the Democrats, despite the wins we're seeing tonight, there's still an internal debate, internal battle about its own future.
Absolutely. I mean, again, on the campaign trail, you will see people talking about these big wins tonight for governors in Virginia and in New Jersey. New Jersey was predicted to be a much closer race, but Mikey Sherrill doing very well in that race. But again, then you will have Republicans who will compare any candidate to Mamdani. So the Democrats are really going to have to decide what they want to be in certain races, especially in more moderate areas.
Julie, before we let you go, what are you looking out for in the coming days, in the coming weeks, on the back of the wins today?
Well, I think the Democratic Party will feel they have a lot to celebrate because they have 2 governors now, and they won by pretty good margins. So I'm looking to see campaigns respond to that and align themselves with those candidates. But I'm also looking to see how certain candidates in more moderate areas respond to questions about Mamdani and how he's going to lead New York City, arguably the most well-known city in the United States of America.
Julie, thank you so much for that perspective. Julie Find in New York. Now we have some breaking news from Mitsui. It will buy back up to 200 billion yen of shares. Mitsui plans to buy back as much as 200 billion yen of shares from Thursday through March 19th. It will retire on March 30th. All shares it is buying back. Now, Chinese Premier Li Qiang is expressing optimism over the Chinese economy following last week's trade truce between Beijing and Washington. Speaking at the annual China International Import Expo in Shanghai, he echoed President Xi Jinping's commitment for an open and inclusive economy.
Some unilateral and protectionist measures have had severe impact on the international economic and trade order. China remains committed to expanding import with an open and inclusive mindset.
Focus our efforts on pursuing high-quality development with special emphasis on expanding domestic demand, especially on boosting consumption, which is to fully unleash the potential of its mega market of over 1.4 billion people.
Our Chief North Asia correspondent Stephen Angle joins us now from the venue. And Steve, we know the messaging is consistent. China is open to international business.
Well, I found it interesting that the message is the same. He did not really tread new territory or new ground here in this speech to the China International Import Expo. And I say that because it's coming off what Donald Trump has claimed to be was a very successful and a meeting of the minds to a certain degree with Xi Jinping at APAC last week. So the messaging, though, from China hasn't changed much. They rejected the zero-sum mentality. They rejected protectionism. They essentially embraced a multilateral approach to trade governance. These are all things that Li Qiang again brought up in his little under 20-minute speech here to open up the CIIE. And keep in mind, this also comes on the heels of what we heard yesterday from the Chinese ambassador to the United States, Xie Feng, basically saying if you want to keep this newfound momentum in trade and relations between China and the United States, you pretty much have to adhere to 4 things. There's 4 red lines. He talked about Taiwan, democracy and human rights. These are areas we're not going to be discussing. China's political system, not going to be discussing, and China's development rights. So again, China is kind of coming out of this meeting between Xi and Trump saying, look, these fundamental differences that we have on how we view trade and how we view geopolitical relations haven't necessarily changed. And that's why I was parsing the words of Li Qiang here and seeing if there was any different tone. He didn't mention the United States, but it was very much at the backdrop of his comments.
You know, as you said, this is the first trade fair since the U.S. and China signed that deal when you were in Korea. I'm just wondering, is there any sense on the ground that we could see, further business deals being struck up? I know that back in 2024, $800 million worth of deals were signed.
Yeah, so what happened in APEC was not necessarily a trade deal where a bunch of companies signed bilateral agreements. It was a meeting of the minds between Donald Trump and Xi Jinping, a bit of a watered down trade truce. And the question going forward now is, will the various ministries and companies in each other's countries follow through on this dialing down of the temperature? And that's what we'll have to see going forward. Even Donald Trump said this is going to be a year-by-year review of their trade relationship, renegotiated every year. So we'll have to see how this goes forward. But again, it wasn't a big earth-shattering trade deal where all of a sudden China and the United States can get back on the right track, if you will. So it's kind of, as I've said over and over again, it's going to be baby steps. And I'm curious too as well why here at the CIIE many of the local journalists were coming to ask me what I thought about U.S.-China relations and what the position is of the United States. They're still kind of figuring this out as well. They were listening to my reports here, perhaps more so than Li Qiang up on the big screen. So I don't know what that says about what I'm saying or not. But again, I think everyone's trying to read this in a certain way.
Well, you have great perspective, Steve. We know you've covered China for a very long time, so great perspective coming from you. We also know that the event is taking place at a very, very huge space, something like 430,000 square meters, rather. That's about, 80 football fields. Is there a sense that, this optimism, is that a reflection of how China is right now in terms of its optimism, in terms of its economy?
Well, absolutely. I mean, now that I'll dial back some of that pessimism I just had on the Chinese and U.S. relationship. Now that the temperature has been brought down on that export uncertainty because of the tariffs, China really right now is focusing on imports and boosting domestic consumption. They launched a new campaign just yesterday through the Commerce Ministry, essentially called the Big Market for All. They're going to be doing promotional campaigns to get at least portray to developing nations which they've exported heavily to, flooded these economies with excess industrial capacity, whether it's EVs or other products. They also want to turn the tables and say, hey, it's not a one-way street. You can sell your products into the Chinese market. We need those imports, but we also need to boost consumption. And that was something Li Qiang talked a lot about, boosting domestic consumption at a time of maybe of lacking confidence at the household.
Stephen Angle, we value your perspective. Our Chief North Asia correspondent, Stephen Angle, joining us from Shanghai. Now, turning to the markets, the global stock sell-off is extending in Asia as fears over inflated valuations rattle investor confidence. South Korea's Kospi is among the biggest losers after AI-fueled gains drove the benchmark to a record earlier in the week. Sell orders for the program trading of Kospi 200 futures were also briefly halted after contracts plunged. Now, the carnage across the region continues even as valuations show that Asian tech giants remain cheaper than the so-called Magnificent Seven stocks. It also follows comments from top Wall Street executives warning investors to prepare for a pullback.
Of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months.
On the near-term valuation side, there's some challenges.
We should also welcome the possibility that there would be drawdowns, 10 to 15% drawdowns that are not driven by some sort of macro cliff effect.
Let's get more context on the tech sell-off now and bring in our Asia tech correspondent, Annabelle Julius. And Belle, a few reasons for the declines today, right? But we can start with AMD. Disappointing somewhat.
Yeah, disappointing somewhat, and I think it's really important to put in the context of disappointing just the loftiest of expectations, because when you took a look at the third quarter numbers, actually they were pretty strong. You saw at least profit coming in better than expected, earnings per share was better than expected, and then the guidance as well. A lot of attention's been on the guidance here. That even came in better than what analysts have been projecting, because revenues tipped to be $9.6 billion. The average analyst estimate was for $9.2 billion. But the problem was that the loftiest of expectations was for $9.9 billion. That was high as estimates have been going. And so this is what has really disappointed some investors here. Of course, you can see there, I mean, it's been a huge run up in the stock year to date. You're looking at gains of more than 100%. A lot of that as well down to optimism that maybe there could be a chance that AMD could look to unseat or at least chip away at some of NVIDIA's dominance in the market. Of course, there were deals that were signed in the period as well. OpenAI, Oracle, they're planning to use the chip. So the AMD CEO, Lisa Su, she says that they're on the right path here. It is a clear step in their growth trajectory, rather. But the big concern is that maybe that payoff and their shift into being a true AI chip player could be a little bit, or taking longer, a bit longer than expected, because the PC side of the business is still doing better than the AI side.
AMD on the one hand, Michael Burry on the other hand, the man known as the Big Short, of course. It's about his, wages on Palantir and NVIDIA that's spooking markets somewhat as well.
Yeah, that's right. I mean, this has really caused some shockwaves through the market here. So Michael Burry, of course, as you said, he's famed for correctly tipping the US property market crisis back in 2008, betting against that. He's Skion Asset Management, as his hedge fund, has just issued or put in their 13F filings, and we got some context on their recent bets. And so they've made those against NVIDIA, also Palantir. So that's through put options. We don't actually know if those put options are outright or otherwise if they're part of spread trades, but it certainly has been enough to spark some fears here. So in terms of the market reaction, I mean, you saw shares in Palantir, for instance, down more than 10%. NVIDIA was under pressure as well. You can see the size of those put options just there. But I mean, the CEO of Palantir, Alex Karp, he went on CNBC essentially calling Burry crazy, but it does point to the fact that we've had that there are concerns around these circular deals, or these so-called circular deals in AI, concerns that we're really in the middle of a very large AI bubble, and that's something that Michael Burry has been hinting at on social media as well. It's interesting because it's not the first time we've seen him taking a bet against NVIDIA in particular. He actually made a bet against it back in the first quarter as well, along with some short positions that he built against Chinese companies that are listed in the US, or Chinese tech companies listed in the US. What is different, though, in this quarter is the disclosure. Because back in the first quarter, Skion said that its puts, that they had a disclosure that its puts could actually be hedging long positions. This time around, that disclosure is missing.
Belle, great stuff. Thank you so much for that. Annabelle Drula is coming to us from Hong Kong. Now let's get more on today's market sell-off from our Asia Markets Executive Editor, Paul Dobson. Paul, just like that, they woke up and decided it is a big fat bubble. Artificial intelligence is now artificial. What's going on?
Well, it's a rocky start to the week for sure. The last couple of days, we've really seen equities coming under some pressure. But we've been waiting for it almost, expecting that this is going to happen at some point for a while. And I think, the market had been running ahead of itself in terms of those valuations for the tech companies. Yes, through their earnings, there was a lot of good news from the Magnificent Seven, from the big companies, talking about spending plans, but also talking about some cash coming in. There were some worries as well that not every company was getting the return immediately on the investments that it was putting up. So we didn't see everything go plain sailing through the earnings season, yet we continued to push up. And I think that you got to this point, the other thing that people were looking at was, what they call the concentration or the dispersion of gains, which was getting narrower and narrower. So there was a smaller and smaller number of companies pulling the entire index higher, and those were the tech companies as well. So that raised those concerns about the valuations. And I don't know exactly what it was, but that seems to have snapped in the last sort of 24, 48 hours, where people thought, just a second, probably this is going a little bit too far, too fast. It's time for a pullback. It's time to reset some of those expectations and have a recalibration of where we are. And that's what's feeding into this downdraft that we're seeing at the moment. But the kind of reaction is a little bit mixed. There are some people saying, yeah, this has got a long way to go, but a lot of people saying this is just a healthy correction, all right?
The thing is, you have to put it in perspective, right? We had the likes of Goldman saying we could see a drop of, 10%. But what is 10% when they've had such a massive run-up? 80%, I think, in the last 3 years. Yeah.
And it's been very strong performance globally, not just in the US this year. So what the Goldman Sachs boss was saying yesterday was over the next 12 to 24 months, we could see a pullback pullback of 10% to 20%.
And could is the operative word. We could.
We could, but I would be surprised if we didn't, because that happens pretty regularly, even in bull markets. And in fact, I think you have to go back to a period between 2016 and 2018 for there to be a whole 24 months where we didn't see a 10% pullback. It would be more unusual if we didn't, in other words. But yeah, sorry.
No, I was just going to say, and that goes to the dot-com bubble as well. When it burst, when we were talking about the bubble, it took a year before it actually burst.
That's it, exactly. So once you get into a sort of period like this where there's a lot of excitement and valuations, it doesn't mean that immediately the market is going to correct into a massive sell-off. And often, in a bubble sort of trading environment, the last 6 months see some of the most explosive gains as well. So everybody is twitchy and thinking, at some point maybe we want to lighten up on this. But nobody wants to miss out either. And there are those that are seeing the market continuing to go up, also thinking, just a second, I'm missing the bandwagon here, I'm missing the ride, and it's getting towards the end of the year and my performance isn't as good as my peers, still want to come in. So you could see there'd be some appetite for dip buying at some point during this kind of turbulent period that we're seeing right now.
Is Asia getting caught in the crosshairs? We talk about, stretch valuations. That's suddenly happening in the U.S., but Asia's still looking pretty okay in terms of valuations.
It is, but, if you thought that the run-up in the U.S. assets has been big, look at Korea, look at the Kospi, which is absolutely flying this year. Some of the biggest names on there, SK Hynix, Samsung, leading the way as well. And we know that Korean investors love a risk. So it wouldn't surprise me if there's a lot of leverage in the system from what they've been up to. And therefore, the chances of a pullback can be that much more extensive for the tech-heavy Asia indexes. So we're looking at Korea, we're looking at Japan, we're looking at Taiwan for that matter as well. Getting caught up in that story. But it's not all that story, right? So you might want to think about, what about China, which has had its own tech bubble since the DeepSeek moment earlier in this year. Those assets have been flying higher too. But are they completely connected with what's been going on in the US? Is the mentality quite the same? Maybe we'll see some sort of people being a little bit more selective about where they put their money from here and thinking about those different stories as well.
From the conversations you've heard, I'm just wondering if we could still see a Christmas rally. I mean, could we still, end the year on a positive note? What would that take?
It wouldn't surprise me. I've been saying for a while the investment mantra is not so much buy the dip, but buy the chip. And people have been coming back into the chip companies all the time because they're still very excited about the AI prospects, right? This is the narrative of the year. This is where the excitement is. It's not a flash in the pan thing. The plans for the investment are humongous, but that's because people really see the potential of this being a transformative moment. So, and there's a lot of believers. There are a lot of people that really see this as a credible long-term investment play. Even with high valuations, we could still go a lot higher. All the companies could turn out to be even more profitable than they are. And some of what we saw in their earnings, Hynix and the likes were saying we're basically sold out for 2026 already. So, there's that as well. So it wouldn't surprise me if there was still the potential for, November in particular and December, two of the most seasonably favourable months for equities, to still give us some, kind of positive returns at some point.
We will know soon enough. Paul, thank you. Our Asia Markets Executive Editor, Paul Dobson there. Of course, we've been keeping an eye on the mayoral race in New York. We're bringing you live pictures from New York. Mayor-elect Zohran Mamdani's headquarters as we wait to hear from the winner. We've heard from Bill Ackman, by the way, among the first to congratulate Mamdani on his victory. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. We've been tracking Zohran Mamdani's win in the mayoral race in New York. We're waiting to hear from him. In the meantime, we've heard from President Trump himself. He says that he wasn't on the ballot, and the shutdown were the two reasons that Republicans lost the elections tonight. President Trump weighing in on Mamdani's win tonight. Trump saying that he wasn't on the ballot and the shutdown were the two reasons why the Republicans lost the elections tonight. Now, the maker of China's best-selling luxury vehicle says it remains in a strong partnership with Huawei, despite U.S. sanctions on the tech company that's helped transform its brand. As Series makes its trading debut in Hong Kong, Group President John Chang told us more about the company's global ambitions.
By end of this year, we're going to put some products in the Middle East for the first time that the Chinese premium EV go out.
Like the M9?
M9, yeah.
Where? Saudi Arabia, UAE? UAE.
First, yeah. We're not going to expand like every country over the night. That's not real, but it's we're gonna go one by one places to make sure that every country we go to, we deliver exactly the same functions, the same services to my customers. We don't want to go abroad and cut this, cut that. So that's unfair. So every market when we go exactly the Chinese version.
Would that be an export product then, not made there?
It will start with export.
But eventually you could be possibly making it in the Middle East?
Sure, yeah, it depends.
Where else are you looking? Because obviously the biggest car markets in addition to China are the United States and Europe. You have origins in the United States in California. Given the tariff war that's happening right now and the protectionism, what are your views on the U.S. market?
Well, U.S. market, to be honest, we rarely consider. It's been very far across the Pacific. So we start with
not very welcoming.
We start with neighbors.
Okay. Yeah. How do you answer the question, if there are those, when they're raised, about your association with Huawei? We all know that Huawei has been sanctioned by the United States. It has some red flags. How do you deal with that question?
We are good partners. We partnered up in the difficult times. We're going to help each other. And from what we did in China, accomplished. So this is a cross-border cooperation. We used to be a traditional car manufacturer. Huawei used to be the communication and cell phone company. So in the past, these two industries are nothing to do with each other. But nowadays we partner up. We're working together to build the next generation's EV car and the intelligent cars as well. So it has to be this way. For car companies itself, it's very difficult to move like us for years, what we did today. And it's also very difficult for companies like, the cell phone companies to overnight shift to car manufacturing is also very difficult. So this partnership is innovative, I think.
Were you surprised how quickly your brand went to #1? We were. I was like, what is Ito? It's basically Harmony OS. It's Huawei on wheels. Oh, is it? What is Ito? What is Series? It's not a household name.
We are not surprised. We're pleased to see that, because the first day when we shaking hands, decided to work together, we're aiming for something, not build something to sell. Because companies like Huawei and like us, we have no room to back up in 2020. It was a very difficult time. Right. So it's very difficult for Huawei at time as well. So we're aiming for the best EV cars.
And that was Series President John Qiang speaking exclusively to our very own Stephen Angle. So Series shares tracking lower after their debut early today. For more, Bloomberg Asia Equity Capital Markets reporter Julia Fioretti is with us in Hong Kong. Julia, what's behind this underwhelming debut?
Well, Haslinda, it's probably not a great day to be listing in Hong Kong or anywhere, frankly, today, given what stocks are doing and the sell-off that we've seen since yesterday on stretched valuations. So it might not necessarily be to do with Ceres itself. Obviously, the stocks are down. The stock has traded down a little bit. It might have been that the discount wasn't wide enough for investors. Ceres is already listed in China. And so there have been a lot of these companies that have been listing in Hong Kong when they're already listed in China, and investors are asking for wider discounts often, especially given that there are so many of these companies now.
It's been such a busy week for IPOs in Hong Kong, right, Julia? What else are we watching for from the auto space in particular?
Well, tomorrow is going to be the driverless day in a way. We'll be seeing Pony AI and competitor WeRide both list in Hong Kong. They went public in the US last year, and then around about just shortly one after one another. And now they've done back-to-back or rather parallel listings in Hong Kong, which just shows how intense the competition is. And they'll both be debuting tomorrow. So again, we'll be looking to see how they trade, whether this is just sort of a one-off in terms of stocks trading down, or whether this is a broader trend, and also to see how they do with respect to each other, given the competition between the two, which really spilled over into the IPOs.
Julie Fioretti, thank you so much for that. Now, staying with IPOs, and India is another one of the busiest markets in the world for new listings. But the recent pricing of Lenskard's offering has sparked concern over whether Indian startups are being valued too high as they go public. We spoke exclusively yesterday with anchor investor DSP Mutual Fund CEO Kalpan Parekh, who defended the process for evaluating investments.
We always analyze companies around their future prospects, around their pedigree, like we do for any listed stock. So I think that, like in the listed market, there are existing companies which make money and don't make money. So is the case with, the IPOs.
Let's bring in our next guest, Avenir Growth Capital founder and managing partner, Andrew Sugrue. He's a veteran VC investor who has stakes in both Zepto and Zetwork, two Indian firms that are closing in on new listings. Andrew, good to have you with us. So, India still the market to be in?
Yes, thank you so much for having me.
Why India? Why is it still the market to be in, Andrew?
Well, I think India has a tremendous and long runway for growth. We are seeing incredible founders matched with large market opportunities, and that's creating pretty substantial opportunities for companies to appreciate in the future.
We talked about how you've invested in Zepto and Zetwork. Has the Indian market evolved since then? What changes have you seen?
I think there's really been a consolidation into a number of platforms who are continuing to compound at real scale. And so I think you're seeing a new crop of companies who are ready to enter the public markets, who are leaders in their categories and in categories that continue to benefit from long-term growth and who have very attractive long-term operating margins.
When you take a look at the valuations, are you concerned?
We underwrite all of our businesses to long-term free cash flow yields. And so when I look at the runways for growth and the margin potential of the businesses we're invested in, we think our companies are very attractively valued in the moment.
Before you decide to, dispense your capital, put it to work, what do you look out for? What characteristics in your founders, for instance, are you looking out for before doing that?
Look, our mission is to invest in category-defining companies who are capitalizing on inevitable technology shifts and where we can identify them very early in their S-curves. And so inevitably, we're looking for the best founders with very large visions. In both the case of Zepto and Zetwork, and then any of the businesses we're looking at, we're really looking for really strong customer value propositions. Are they better, faster, cheaper? Are they operating in a really large market? And do we have visionary founders who we think can go the distance?
We talk about Zepto and Zetwork. They're really in different sectors. One's in, quick commerce, the other in manufacturing tech. What is the link between the two? How are you looking at, both investments?
I think both are customer obsessed. In the case of Zepto, they're focused on being obsessed with Indian consumers who are looking to procure any commerce products, groceries, retail items, et cetera. In the case of Zetwork, it's working with large and small enterprises around the world who are looking to manufacture custom products.
And that is a key consideration as you think about future investments?
I think so. What we're really looking for are companies that have found a way to break trade-offs, to be able to deliver dramatic value to their customers, and where they can earn a portion of that value in the form of their margins. And so I think what you continue to see Zetwork and Zepto do is continue to invest in better product experiences, better selection, value, price, convenience, and ultimately deliver a huge surplus to their customers.
Andrew, we know that Zepto and Zetwork are set for IPOs. What do you make of the timing?
I think both are companies of sufficient scale, of sufficient management capabilities, and the market, I believe, will be receptive for companies of their nature. I think it's a function of. Go ahead.
I was just going to point out that timing is almost everything. If you were to IPO today, given the market sentiment, it may not really be the right time. How are you looking in terms of, the cycle, in the tech cycle that we're seeing in terms of the U.S. and China?
Well, the U.S. public markets have really been driven by the AI intelligence revolution that we're going through at the moment. India has public market performance has been more muted, as its public markets aren't nearly as tied to that AI wave at the moment. And so what you've seen is far less inflows of foreign capital coming into Indian public markets. The Indian markets have been supported by domestic capital inflows into the markets, and so I think that eventually will normalize, that there will be inflows into India, because that is a market that has tremendous growth prospects, has incredible founders building really large companies that can compound for a very long period of time.
Would you say that the correction we're seeing in the tech space today was a long time coming and it could be deeper from here?
The thing I'm most confident on is where it's going to go over the very long term. I think the penetration of artificial intelligence as a percentage of any corporate cost structure is at its all-time low relative to where we think it will be 10 years from now. And so when we think about what these businesses will be worth, we don't obsess too much about what they're going to be worth over the next day, 2 days, 2 quarters. We're really focused on over the next 5 years, and businesses like the ones that we invest in that have really long runways of growth, incredible founders, and high operating margin potential. Those are the companies that we're pretty excited to hold throughout any market volatility.
To that point, valuations do matter. And when you take a look at the stretch valuations in the U.S. versus the, what could be seen as reasonable valuations in Asia, that may help you decide where to park your money, right?
I think it's ultimately about what long-term growth you're underwriting to. I think the reason why the Indian markets have historically traded at higher near-term price-to-earnings multiples relative to other markets is a function of the underlying assumed growth ahead of that market. And I think as you look across India, when you think about categories like retail, the rise of the middle class, the rise of GDP per capita, those are long tailwinds that can power the economy for a very long time.
Andrew, hang tight. We're headed to New York, where I believe Cuomo is speaking. Of course, this is the man who lost out to Mamdani. Take a listen.
Together. This campaign was to contest the philosophies that are shaping the Democratic Party, the future of this city, and the future of this country. And this coalition transcended normal partisan politics. It brought together Democrats and Republicans and independents, joined by the simple fact that their first allegiance is as citizens of New York City. $2 million voters, the largest number in modern political history, cared enough to show up in a municipal election. And 42% voted for us on an independent line. That is the highest percentage in modern history. Ironically, It is just higher than when Mario Cuomo got 40% on an independent line against Ed Koch in 1977. It's also important to note that almost half of New Yorkers did not vote to support a government agenda that makes promises that we know cannot be met. We support an economy of jobs, of opportunity, of entrepreneurship. That's what New York is, and that's what New York must remain. We are a nation of laws, and we believe in law and order, and we need the police to keep society safe. We will not make the NYPD the enemy. We cherish our diversity, and we have no tolerance for discrimination of any kind by race, religion, sexual orientation, or creed. And we will not tolerate any behavior that fans the flames of anti-Semitism or diverse attacks. Our strength is our unity. Black, white, brown, Christian, Muslim, Jewish, Buddhist. We are one. We are the family of New York. We believe in interconnection and mutuality and codependence. And you attack one of us, you attack all of us. That is what it means to be a New Yorker. No one and nothing will ever divide us. And this campaign was necessary to make that point. A caution flag that we are heading down a dangerous, dangerous road. Well, we made that point, and they heard us, and we will hold them to it. Also, my friends, feel proud, because we accomplished the two important New York characteristics. We got up off the mat after the primary, and we made it a real race when the media had already commenced the coronation. And feel proud, because we fought our hearts out and we left it all on the field. Congratulations to Zohran Mamdani. No. That is not right. That is not right, and that is not us. That is not us. Tonight was their night, and as they start to transition to government, we will all help any way.
And we just heard from Andrew Cuomo, who lost out to Zohran Mamdani in the mayoral race in New York. We're waiting to hear from Mamdani, who should take on the mic very shortly. In the meantime, we have breaking news here from China. China has said that it will suspend 24% of tariffs on U.S. goods for 1 year. China says it will retain 10% tariffs on U.S. goods, and it will suspend tariffs on some U.S. goods from November 10th. Of course, this has to do with that agreement between the U.S. and China when U.S. President Donald Trump met with Xi Jinping in South Korea. China again suspending tariffs on some U.S. goods. It will retain 10% tariffs on U.S. goods in the meantime. Let's get back to our guest, Avenir Growth Capital founder and managing partner, Andrew Sugrue. Andrew, we talk about, the IPO environment. Talk to us about what's different about taking a tech company in the U.S. versus in India.
Well, in India, I think there's a really strong mutual fund community who's much more consultative as part of the IPO process, where you're getting to know the business. I think the Indian markets also tend to price businesses out on a 2-year out earnings multiple, which is a bit further out than the United States markets will price it. And the Indian regulators are very adept regulator who gets very involved in the DHRP filing process.
What are the challenges right now, Andrew?
I think the challenges are commanding attention. I think the Indian markets are a prove it and then we'll believe it story. And so I think as a new business to the markets, you're generally going to trade at a discount to listed peers, even on a growth adjusted basis. And then once you prove to the markets that you can continue to sustain your growth, that you can continue to show that margin progression, you'll be rewarded over time.
India's always talked about playing on the global stage. When it comes to their startups, are they on par now with their global peers?
I believe so. In fact, if you look at companies like Zepto or Zomato, these are incredible founders who made a quick commerce model work in India, a model that did not work anywhere else in the world. And so I think I put that as a testament to the grit of these founders, to the incredible technology that they built, and the demand from Indian consumers for better, faster, and cheaper alternatives.
So could India then become a larger part of your portfolio in the not-so-distant future?
We're bullish on the long-term prospects for India. We're bullish on commerce and enterprise businesses that are levered to long-term tailwinds like AI, like rising GDP per capita, this increasing middle class. And if we can continue to find great founders like Adit, like Srinath and Amrit, and like Neeraj at Spinny, we would love to invest in more Indian companies.
The big theme right now is, of course, the AI space, whether or not there is a bubble, whether you're, an AI company in the US, China, or India. I mean, the question remains the same. What's your take? How do you weigh on this AI bubble debate?
Well, I think there's a question about near-term and long-term valuations. I think we are at the very early innings of this intelligence revolution. The companies that come to dominate their categories that are levered to this AI shift will be orders of magnitude greater than in scale and presumably in valuation than they are today. The question is really about picking which are those right winners. And I think one of the key challenges is, will it be incumbent businesses or will it be net new businesses that are created in this moment? When you survey enterprise buyers, as an example, they tell you about 65% of them believe that they will be procuring AI products from their existing vendors. So I think it's ultimately going to be about execution. Who are the ones who leverage their distribution, their data, their customer centricity to build novel products that uniquely serve the needs of their customers and who meet this moment?
The sell-off that we're seeing in AI companies today, is that an inflection point or just, a correction that, that will see a rally yet again?
I think over the long term, AI is a penetrating technology that will again be a much larger percentage of our economy in the future than it is today. I think today people are extrapolating off of AI capex build out. They're rotating off of near term trends, and I think the key question is, where is this going over the long term? And the long term, I think, is quite bullish for these businesses.
I guess the key question is also about returns. When will we start seeing the returns from the capex that's being pumped in?
Well, I think you're already seeing that when you look at large companies like Meta and the improvements that their AI technology has done for ad targeting and the monetization per ad that they're now yielding off of those investments. Those are extraordinary returns. When you think about companies in the enterprise, when you look at what OpenAI is generating off of ChatGPT relative to the training runs that were trained in GPT-5, those are pretty attractive returns.
Andrew, if you believe it is a bubble, how long might this bubble last before it bursts?
I actually don't think it's a bubble. I think that there, in any moment where people are betting on a platform shift, where that platform shift can have a tremendous reallocation of value in the economy, there's going to be pockets of lower quality businesses that might appreciate with the great businesses. What I do feel confident is the great businesses that are levered to AI will be more valuable in the future than they are today.
Andrew, thank you so much for your time today. Andrew Sugrue of Avenir Growth Capital. Now, still ahead on Inside, the APAC CEO of Natixis Corporate Investment Banking will be joining us to discuss the latest market trends as traders keep an eye on the Fed's next move. Plus, analysis of the Indian markets with Anand Rathi Wealth as trade negotiations between New Delhi and Washington continue. In the meantime, live pictures from New York Mayor-elect Zohran Mamdani's election night headquarters as we wait to hear from the winner. More to come. In our next hour of Insight, keep it here with us. This is Bloomberg. Disappointing with its forecast. We also heard from the likes of Michael Burry revealing his bearish bets against big tech like Nvidia, like Palantir. That's weighing on sentiment right now. In terms of S&P futures, it is in negative territory, but barely down about 1/10 and the dollar index stabilizing, currently flat as we speak. Again, Asian stocks pairing earlier losses, investors possibly reassessing whether those losses are going too far. Now, a private gauge of China's services activity showed expansion in October. Even though growth was the weakest in 3 months, the rating dogged China PMI slipped to 52.6 from 52.9 in September, extending a growth streak that started after COVID lockdowns in 2022. The expansion was driven by a solid improvement in domestic demand, particularly travel and holiday spending. And we have breaking news. We have a Newsom-backed California redistricting measure passes. Again, Newsom-backed California redistricting measure passes, and that's according to AP. California voters approve new U.S. House map with up to 5 more Democratic seats. The background of this, of course, California will give you that background slightly later. As of now, the Newsom had staked his political future, including a possible White House run on pushing a ballot initiative to redraw that congressional maps of the largest U.S. states. Now back to the Chinese economy. Let's head to the annual International Import Expo, where global companies are sorting through the implications of the U.S.-China trade truce after last week's meeting between President Trump and Xi Jinping. Our Chief North Asia correspondent Stephen Angle joins us live from the venue in Shanghai. Steve, talk to us about the atmosphere there. What are you hearing on the ground?
Well, I'm here in the press center. We've been here since early this morning after arriving close to midnight last night. So I haven't actually been over to the actual floor space where the exhibitors are. We're going to go there this afternoon and, do a bit of a reconnaissance for the rest of this week, where we'll be talking to various industries. What I've seen already is there's tons of different humanoid robotics being featured over there in the main halls. Keep in mind, this is the giant exhibition hall where the annual auto show is also held. It is a massive facility, so we have to kind of get our pulse check this afternoon. But clearly, there is some optimism here, of course, that China and the United States brought down the temperature last week with that highly anticipated meeting between Xi Jinping and Donald Trump. So that essentially paves the way as well for a lot more optimism for exporters into China. China importing more products, because that's been the focus in the last couple of days with a new program, if you will, sponsored by the Ministry of Commerce here, called the Big Market for All. So China clearly wants to rebalance its economy and rely less on exports, boost imports, boost domestic consumption, and rebalance that imbalance that we've seen on a record trade surplus, with exports far outpacing imports the last few years, if not decade. So that's going to be the emphasis for us. Last year, there was a 2% increase in the number of actually signed deals here at CIIE to the tune of, about 80 billion US dollars. We'll have to see if this rapprochement, if you will, between China and the United States will lead to an even bigger number this year.
And Steve, we heard from the Premier earlier, the messaging was quite consistent with what we heard from Xi Jinping, when he was in Korea.
Yeah. Well, if I can say this outright, unlike the White House, okay, the Chinese messaging is pretty consistent, always, okay? They say the same thing again and again and again with very little variance, okay? And so the speech we got today from Li Qiang, the premier, touched on all those hallmarks. We should reject zero-sum games. We should reject unilateralism. We should reject protectionism. And we should approach global trade through a multilateral lens. Okay, these are constant themes that China keeps on promoting. Li Qiang, Xi Jinping, essentially trying to portray themselves as stewards of the free global trading system. Now, he also went on to talk about China needs to further open up. That is also a consistent theme. It's about following through on that, obviously. And also he talked about boosting consumption. Again, that has been a constant theme. They have to follow through on that with solid programs and incentives to get households who are a little bit gun shy of spending their hard-earned savings into this economy. So again, yes, the messaging from Li Qiang today, very consistent.
Steve, thank you so much for that perspective. Bloomberg's Chief North Asia correspondent Stephen Engle there for us. Well, our next guest runs Natixis corporate and investment banking business in the Asia Pacific, and he believes mainland China presents significant opportunities. Joining us exclusively, Bruno Lessard. Bruno, good to have you with us. What opportunities, what are you looking at, and how has the sentiment changed?
Thank you for having me, Haslinda. And yeah, I mean, to your point about China, I think it's good to see indeed that U.S. and China are getting closer. But as far as we are concerned at Natixis CIB, we are still very optimistic on China. We see a huge reservoir of growth. Just think about one number: the GDP per capita of China is 14,000 USD. The one of Portugal is 28,000. So if you think that China can reach the level of Portugal, it means that it can double in size. It means that 5% growth per year could keep going on for the next 14 years. So I think it's for us, we are investing in China. We are developing new capabilities on the global market side. But besides China, we are also investing in Japan at the moment, and we are also investing in India. So China, Japan, and India are our key investment focus for this year. We've done a lot in Singapore and Southeast Asia in the past. We've done a lot in Australia. So this is where we see the growth coming from in the coming months.
Before we touch on the other Asian markets, you talk about China. I mean, the fact that the government is willing to introduce more stimulus, how are you looking at that, and how are you investing on the back of that?
Yeah. So the way we look at it is, look, banks and corporates have a lot of cash to deploy, and while they used to invest that cash offshore for the last decades, now they want to keep it so far. So we as a bank are happy to borrow from them because we need cash constantly. We need funding for our business. But for the corporates, we also propose to them investment solution to invest their cash. You know the yield environment in China. You know the yield environment in the US. So there are good tools here, good investment strategy to help them have good investments. So this is what we are doing. In the long run in China, it's a new China. China is changing. It's not the China we knew 10 years ago. It's going to be even different. It's aging, more asset management, more pension funds. So for us as a bank, it's all attractive too. I mean,
for a lot of CEOs, it is about the deal-making activity that's making them excited. We have the top CEOs in Hong Kong yesterday yesterday, talking about why they're there, and deal-making is part of it. I mean, how are you assessing the deal-making environment in Asia in the next 12, 24 months?
Yeah, so in China it's better. Clearly this year
Not
we
great
have...
compared to the other markets.
Yeah, but it's better. We like people who sell or buy something, right? So it's better in the sense that many of the Chinese companies are reassessing the way they do their international business. And our value add at Natixis is to do cross-border deals. We are not a domestic Chinese bank. We are an international corporate investment bank. So when our clients who are global in our key sectors are doing stuff, buying or selling on the international market, we like it and we are happy to have them. And actually, as a matter of fact, we see more and more clients who are doing revisiting their portfolio of investment offshore outside of China. So we see a rebound of M&A activities in China. We see that corporates in China are revisiting what they do in countries where they feel less welcome than before. It's true for, of course, the US. It's true for Europe as well. And they are reinvesting into the Middle East, into Southeast Asia, into Latin America.
And Japan is one of the markets that people are looking at when it comes to deals. It's possibly at record levels right now because of the low rate environment and also reform in governance. How are you looking at that market?
Yeah, and actually we just opened this year our branch. We used to have a securities, Natixis Securities Japan. We just opened a branch, and precisely for that reason is that we want to keep growing not only our global market activities in Japan, which is the biggest market for global market with China across Asia Pacific, but also our banking business. We are strong in infrastructure, in telecom, in healthcare, and we see this energy, of course, and we see these sectors are being very appealing in Japan, very
how
much
many deals
indeed.
do you see in the next 12, 24 months? Give us a sense of how excited you are about the Japanese market.
Look, for the reasons that you just mentioned, we see already, and we are doing this right now, which are basically carve out to the point you were making, that to maximize shareholder value for investors under the new government guidelines, large Japanese corporate will have to do some carve out. They will have to divest some non-core assets. We're here to help on that. We hope to identify some assets that we can help them to divest, and we also support our global clients, private equity firm, infra funds who are coming into Japan and want to seize this opportunity. So for us, it's very, very exciting.
So on the back of that, are you planning to add headcount possibly in the Japanese market? Is that a plan?
Yes, that's absolutely the plan. We are investing right now. We are discussing. We are hiring.
Big? Come on, Bruno, you can tell us.
Yeah, look, no, but we have a plan to double the size of our business in Japan in the next 5 to 7 years. So of course it will come with business and it will come with people. So we are trying to attract talent. I think we have a growth story in Asia Pacific, globally at Natixis, but also in Asia Pacific. So with a strong culture. So we hope that it's going to attract talent, and we are really working on that right now as we speak. So it's quite exciting.
How big might these deals be in Japan? We so far year to date is Toyota Motor. That's been the biggest deal out there.
Yeah.
Could we see such big deals going forward?
Yes, and that's why Japan is attractive for private equity funds, for infra funds. You will see big deals in Japan because it's a big economy, big corporate, big infrastructure. So there will be multi-billion transactions, and that's what is exciting because you don't find that yet really in India. You don't find that in Southeast Asia really. You have that in Australia. You have that in Japan. So that's we will see big deals. Yeah.
You talk about private equity. You don't see those big deals in India, but India is still a very attractive market for private equity.
Yeah, of course, very attractive. That's why we also focus on India, and we are actually opening soon a branch in Gift City to capture this growth story as well. Yes, there will be big deals in India too, but India is not at the same level of development or same stage of development as Japan is. So naturally, it's lagging a little behind, but it will catch up for sure.
What do you make of valuations?
Do you mean?
You know, like all these deals, they're getting more expensive. How do you look at them?
They are, but we are very disciplined, so we are not going to to put our balance sheet at work for over-leveraging assets that we don't think deserve over-leverage. So, our team are mature. They are very good people. They know how to say yes, how to say no. So valuation in some areas are very high, but when they are backed, like for infrastructure, by strong cash flow story, we are happy to help clients to leverage that. But there are stuff that we won't do for sure.
Of course, we're watching really closely the interest rate environment, and when you take a look at Asia, a lot of the central bankers here are more than happy to cut rates compared to the Fed. Is that perhaps encouraging the flows to Asia versus the US?
Yeah, it's good news. It's good news. It's good news for currencies that are pegged to the dollar, like the Hong Kong dollar, for instance. It's good news for emerging countries because they will have to attract FDIs, and it will be easier. Think about Indonesia, for instance. For them, I think it's very good news. So for Asia Pacific as a whole, I think it's good news. The rate differential, is shrinking. So I think it's good for Asia Pacific. So I'm positive for 2026 in that
Bruno,
respect.
I'll be remiss not to get your opinion on what's happening in the market today. We're seeing a sell-off in the market. AI companies are getting sold off. What do you make of that? I mean, how did the market change its mind so quickly?
Yeah, I think it's healthy. Everybody should. I mean, I have seen the valuation coming up and up in the US in particular. So I think it's healthy that there is a bit of cleaning. We need to see how much, how far, how long. But so far, I think it's good. As far as Japan is concerned, look, they have had such a rally that it's just correction somewhat. But there is still a lot to more upside in the future. Just if you compare valuation, Japan versus US, you see that there is a huge potential in Japan for further growth.
Are you concerned about the circularity of the deals? They talk about how, that is
in
the biggest
AI space?
In the AI space.
Yes, absolutely. We look into that. We want to make sure we understand. We ask the right question. There is a lot of excitement, multi-billions deals, etc. We want to understand who does what is the reality of the cash flow behind, what is the real demand behind. Yes, for sure. We look into that.
Is there a bubble?
I don't think so for now, because there is a need for it's an infrastructure investment in first place. It's a new infrastructure, like we had the optic fibers, for instance, 10 years or 15 years ago. So it's a new infrastructure that is needed for a new demand and a new technology, and this technology is useful. So I think there is still a lot of further investment needed in that respect. After, we need to see how far it can go. As long as it's supported by demand, it's good.
What's the biggest theme you think will play out in the markets in the next 12 months?
In the next 12 months...
Would it be still trade? Would it still be the Fed? AI?
Yeah, I think this theme will remain. Of course, we'll watch the geopolitics for sure. What we see is that now it's easing, so it's good news for everyone. The big question will be, indeed, I think what was mentioned earlier is China able to revive its own consumption to, alleviate the need to export massively, and that will also ease trade tensions, because the less you need to build your economy on export, and because you have a strong consumption, the less you are aggressive, and the more you can, manage your trade deals. So we will look into that. It's not easy, because consumption is many factors. It's confidence, it's trust, it's many things together. There is savings in China, so that will help for sure. This is something to watch for sure in 2026.
Bruno, good to have you with us.
No,
Thanks
thank
for popping by.
Thank you very much for having me.
Bruno Lassan, CEO of Natixis Corporate and Investment Banking, APAC. Now, still ahead, Democrat Zohran Mamdani is elected mayor of New York City in a historic victory, putting a self-declared socialist in charge of the capital of capitalism. We're expecting to hear from him very shortly. Keep it here with us. This is Bloomberg.
I wish Andrew Cuomo only the best in private life. But let tonight be the final time I utter his name. As we turn the page on a politics that abandons the many and answers only to the few. New York, tonight you have delivered a mandate for change. A mandate for a new kind of politics. A mandate for a city we can afford. for a government that delivers exactly that. On January 1st, I will be sworn in as the mayor of New York City. And that is because of you. So before I say anything else, I must say this. Thank you. Thank you to the next generation of New Yorkers who refused to accept that the promise of a better future was a relic of the past. You showed that when politics speaks to you without condescension, we can usher in a new era of leadership. We will fight for you because we are you. Or as we say on Steinway, ana minkum wa ilaykum. Thank you to those so often forgotten by the politics of our city who made this movement their own. I speak of Yemeni bodega owners and Mexican abuelas, Senegalese taxi drivers and Uzbek nurses, Trinidadian line cooks and Ethiopian aunties. Yes, aunties. To every New Yorker in Kensington and Midwood and Hunts Point, know this. This city is your city, and this democracy is yours too. This campaign is about people like Wesley, an 1199 organizer I met outside of Elmhurst Hospital on Thursday night. A New Yorker who lives elsewhere, who commutes 2 hours each way from Pennsylvania because rent is too expensive in this city. It's about people like the woman I met on the BX 33 years ago, who said to me, I used to love New York, but now it's just where I live. And it's about people like Richard, the taxi driver I went on a 15-day hunger strike with outside of City Hall, who still has to drive his cab 7 days a week. My brother, we are in City Hall now. This victory is for all of them. And it's for all of you. The more than 100,000 volunteers who built this campaign into an unstoppable force. Because of you, we will make this city one that working people can love and live in again. With every door knocked, every petition signature earned, and every hard-earned conversation, you eroded the cynicism that has come to define our politics. Now I know that I have asked for much from you over this last year. Time and again, you have answered my calls. But I have one final request. New York City, breathe this moment in. We have held our breath for longer than we know. We have held it in anticipation of defeat. Held it because the air has been knocked out of our lungs too many times to count. Held it because we cannot afford to exhale. Thanks to all of those who sacrificed so much, we are breathing in the air of a city that has been reborn. To my campaign team, who believed when no one else did, and who took an electoral project and turned it into so much more, I will never be able to express the depth of my gratitude. You can sleep now. To my parents, Mama and Baba, you have made me into the man I am today. I am so proud to be your son. And to my incredible wife, Rama, there is no one I would rather have by my side in this moment and in every moment. To every New Yorker, whether you voted for me, for one of my opponents, or felt too disappointed by politics to vote at all, thank you for the opportunity to prove myself worthy of your trust. I will wake each morning with a singular purpose: to make this city better for you than it was the day before. There are many who thought this day would never come, who feared that we would be condemned only to a future of less, with every election consigning us simply to more of the same. And there are others who see politics today as too cruel for the flame of hope to still burn. New York, we have answered those fears. Tonight we have spoken in a clear voice. Hope is alive. Hope is a decision that tens of thousands of New Yorkers made day after day. Volunteer shift after volunteer shift, despite attack ad after attack ad. More than 1 million of us stood in our churches, in gymnasiums, in community centers, as we filled in the ledger of democracy. And while we cast our ballots alone, we chose hope together. Hope over tyranny. Hope over big money and small ideas. Hope over despair. We won because New Yorkers allowed themselves to hope that the impossible could be made possible. And we won because we insisted that no longer would politics be something that is done to us. Now it is something that we do. Standing before you, I think of the words of Jawaharlal Nehru. A moment comes but rarely in history when we step out from the old to the new, when an age ends and when the soul of a nation long suppressed finds utterance. Tonight we have stepped out from the old into the new. So let us speak now with clarity and conviction that cannot be misunderstood about what this new age will deliver and for whom. This will be an age where New Yorkers expect from their leaders a bold vision of what we will achieve, rather than a list of excuses for what we are too timid to attempt. Central to that vision will be the most ambitious agenda to tackle the cost of living crisis that this city has seen since the days of Figueroa LaGuardia. An agenda that will freeze the rents for more than 2 million rent-stabilized tenants. Make buses fast and free. And deliver universal child care across our city. Years from now, may our only regret be that this day took so long to come. This new age will be one of relentless improvement. We will hire thousands more teachers. We will cut waste from a bloated bureaucracy. We will work tirelessly to make lights shine again in the hallways of NYCHA developments where they have long flickered. Safety and justice will go hand in hand as as we work with police officers to reduce crime and create a Department of Community Safety that tackles the mental health crisis and homelessness crises head on. Excellence will become the expectation across government, not the exception. In this new age we make for ourselves, we will refuse to allow those who traffic in division and hate to pit us against one another. In this moment of political darkness, New York will be the light. Here, we believe in standing up for those we love. Whether you are an immigrant, a member of the trans community, one of the many black women that Donald Trump has fired from a federal job, a single mom still waiting for the cost of groceries to go down, or anyone else with their back against the wall, your struggle is ours too. And we will build a city hall that stands steadfast alongside Jewish New Yorkers and does not waver in the fight against the scourge of anti-Semitism. Where the more than 1 million Muslims know that they belong. Not just in the 5 boroughs of this city, but in the halls of power. No more will New York be a city where you can traffic in Islamophobia and win an election. This new age will be defined by a competence and a compassion that have too long been placed at odds with one another. We will prove that there is no problem too large for government to solve and no concern too small for it to care about. For years, those in City Hall have only helped those who can help them. But on January 1st, we will usher in a city government that helps everyone. Now I know that many have heard our message only through the prism of misinformation. Tens of millions of dollars have been spent to redefine reality and to convince our neighbors that this new age is something that should frighten them. As has so often occurred, the billionaire class has sought to convince those making $30 an hour that their enemies are those earning $20 an hour. They want the people to fight amongst ourselves so that we remain distracted from the work of remaking a long broken system. We refuse to let them dictate the rules of the game anymore. They can play by the same rules as the rest of us. Together, we will usher in a generation of change. And if we embrace this brave new course, rather than fleeing from it, we can respond to oligarchy and authoritarianism with the strength it fears, not the appeasement it craves. After all, if anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. And if there is any way to terrify a despot, it is by dismantling the very conditions that allowed him to accumulate power. This is not only how we stop Trump, it's how we stop the next one. So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up. We will hold bad landlords to account because the Donald Trumps of our city have grown far too comfortable taking advantage of their tenants. We will put an end to the culture of corruption that has allowed billionaires like Trump to evade taxation and exploit tax breaks. We will stand alongside unions and expand labor protections because we know, just as Donald Trump does, that when working people have ironclad rights, the bosses who seek to extort them become very small indeed. New York will remain a city of immigrants, a city built by immigrants, powered by immigrants, and as of tonight, led by an immigrant. So hear me, President Trump, when I say this. To get to any of us, you will have to get through all of us. When we enter City Hall in 58 days, expectations will be high. We will meet them. A great New Yorker once said that while you campaign in poetry, you govern in prose. If that must be true, let the prose we write still rhyme and let us build a shining city for all. And we must chart a new path, as bold as the one we have already traveled. After all, the conventional wisdom would tell you that I am far from the perfect candidate. I am young, despite my best efforts to grow older. I am Muslim. I am a democratic socialist. And most damning of all, I refuse to apologize for any of this. And yet, if tonight teaches us anything, it is that convention has held us back. We have bowed at the altar of caution and we have paid a mighty price. Too many working people cannot recognize themselves in our party. And too many among us have turned to the right for answers to why they've been left behind. We will leave mediocrity in our past. No longer will we have to open a history book for proof that Democrats can dare to be great. Our greatness will be anything but abstract. It will be felt by every rent-stabilized tenant who wakes up on the first of every month, knowing the amount they're going to pay hasn't soared since the month before. It will be felt by each grandparent who can afford to stay in the home they have worked for, and whose grandchildren live nearby because the cost of childcare didn't send them to Long Island. It will be felt by the single mother who is safe on her commute and whose bus runs fast enough that she doesn't have to rush school drop-off to make it to work on time. And it will be felt when New Yorkers open their newspapers in the morning and read headlines of success, not scandal. Most of all, it will be felt by each New Yorker when the city they love finally loves them back. Together, New York, we're going to freeze the... Together, New York, we're going to make buses fast and... Together, New York, we're going to deliver universal... Let the words we've spoken together, the dreams we've dreamt together, become the agenda we deliver together. New York, this power, it's yours. This city belongs to you. Thank you.
And that was New York Mayor-elect Zohran Mamdani's victory speech at his election night headquarters. A fiery speech. He talked about building a New York for all New Yorkers, including the aunties out there. He talked about how he won against all odds. Of course, Mamdani secured 50.4% of the votes. And against all odds, he talked about how he will build a city of immigrants, run by immigrants now. It completes a winning day for the Democrats, who also secured the governor's mansions in Virginia as well as New Jersey. Let's bring in Bloomberg's Julie Fine in New York. Julie, what do you make of that speech by Mamdani?
Well, that is somebody that knew there was a little controversy going in and really just let it all out. He was unapologetic for being a Democrat socialist. He talked about how he plans to lead the city, how he is an immigrant and it needs to be a city for immigrants. He also spoke directly to President Donald Trump, really baiting him and taking him on there, knowing that he doesn't agree with him with a lot of his policies. So I think what this really does is set up what's going to be a very contentious relationship with the president and someone who was virtually unknown in this city a year ago.
And President Trump took to Truth Social saying, and so it begins. Pretty cryptic, but we know that Trump has said he will take action if Mamdani were to win.
Yeah, he has said that. And a lot of also what Mamdani wants to do would require some federal funding. I mean, he talked about free buses. He talked about, giving, I believe that he said universal pre-K. So when you talk about all of that, you need the funding to get it done. It has to go through a legislature. You can't just say, hey, we're going to do this without knowing for sure you have the money and the funding to get it done. So it is definitely setting up a battle between the two of them that really began once his campaign took off.
Julie, in another development, California approved a new congressional map. This is a triumph for Gavin Newsom. Talk to us about the significance of this.
Well, this is very significant because, first of all, back in the summer, Texas decided to redistrict, hoping to add 5 Republican seats. Gavin Newsom said, okay, I can fight fire with fire here. They put it on the ballot, and California voters overwhelmingly agreed with this. So, to somewhat set off what was done in Texas. Gavin Newsom, I mean, this was a big risk for him. If this did not go well, it wouldn't have reflected well on him. This is someone who is being openly considered as a 2028 candidate for president. So a big risk for Gavin Newsom paid off for him tonight in big dividends.
Julie, what does it all mean now for President Trump, even for the governor races? We saw the Democrats win in New Jersey, in Virginia.
Well, what this really means for President Trump is something he should pay attention to is the margins. The Democrat won in New Jersey, but it was by a much bigger margin that was originally expected. In Virginia, Abigail Spanberger, of course, winning by a large margin as well. Also, you do have to remember that President Trump did endorse very late in the game Andrew Cuomo, who lost to Zohran Mamdani. So what President Trump does need to look at tonight are the numbers and the margins in these gubernatorial races. However, Republicans will now, when it goes to campaigning, talk about candidates in the eyes of Zohran Mamdani. They will say that the Democrats have a socialist running recognizably the largest city in the United States of America. So that is something that the Republicans will pay attention to tonight, how to campaign on this.
Julie, thank you. We know it's been a long night for you, but thank you so much for your perspective there. Bloomberg's Julie Fine in New York. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Indian exporters are urging Prime Minister Narendra Modi to provide immediate relief from the U.S. decision to impose a 50% tariff. The U.S. levies are hitting labor-intensive sectors the hardest, with exports to the U.S. falling by nearly 12% in September from a year earlier. Let's get the market's perspective with Shweta Rajani, Senior Vice President and Mutual Funds Head at Anand Rathi Private Wealth Management. Shweta, good to have you with us. How is this impacting market sentiment, you think?
Good morning, Haslinda. Like you said about exporters being hit by the tariff increase, we've seen for certain sectors, like especially textiles, gems and jewelry, leather goods, called as footwear, they've seen approximately a 40% drop in, the exports that are happening to US. While this is the sectors that are impacted, but when I'm looking at it from a broader market perspective, they don't have too much of an ownership in Nifty 500 or the broader listed companies space. So from a profitability standpoint or market sentiment standpoint, it's not having so much of an implication, but from the exporter segment, it's clearly hitting profitability of those unlisted companies over there. So yes, government needs to intervene, and government is looking at GST cuts or having trade fairs so that they can look at other markets other than US till the trade deal fixes in. Net broader market, not so much of a sentiment dent, right, but to a larger exporter segment, yes, an impact.
So the Sensex and the Nifty are well supported. Is that what you're saying? And when you take a look at the earnings we've seen so far, that support will continue.
Absolutely. So if I look at the second quarter result is on, and if we see the Nifty 50, it's showing a 4% growth in profits. But the moment we step into the broader large cap, that's reporting 7% profit growth, which is in line with what was expected. Mid cap, small caps are reporting 16-20% profit growth. So that's, again, very much supportive to the market, as well as valuations are more or less reasonable. So that's where we are seeing Nifty, Sensex holding on into, as of now, a range-bound kind of a movement.
There are several risk factors out there for the medium term, and that includes the weakness in the Indian rupee, tariffs, and the weak consumption as well. If you take a longer-term perspective, what is needed to provide that support?
So from a longer-term perspective, I think government's doing what it's supposed to do. It's given a good fillip to consumption, whether it started off from moving people to the newer tax regime, having rate cuts, giving the GST cut. We've already seen in the month of October a significant boost in consumption coming in. I think given that inflation is supportive, we're looking at CPI at 1.5%, expected to be in the range of 2.5% for the entire year. RBI may do one more round of rate cut, which would leave more money that can be consumed, more money that can enter into the markets in the form of investments. Overall, if I see the demand is picking up, government is also doing what it needs to do on the capex. The 11 lakh crore budget that they have, they're spending it well. So all that from medium-term risk, I'm not foreseeing so much of a domestic fundamental risk, but more of the risk would be from the standpoint of the global factors like, the change in the supply chain that we are seeing because of tariffs hitting and people looking at, economies where there is good friendship trades moving from there on. So those are more of a risks than the domestic risks.
Shweta, we're seeing some signs of revival for Chinese equities. I'm just wondering whether you see a risk of a rotation of capital away from India towards, cheaper markets like China, for instance.
So from a valuation perspective, India has always been in that, slightly expensive zone. But if we see from our own long-term averages, right now, India is in a fair value zone. Yes, money moving into China. We've seen that happening, honestly, in multiple pockets that suddenly takes noise around it. But over a longer term perspective, from an India standpoint, if I'm just seeing the 2025 number, where foreign institutions probably would have withdrawn, but domestics have added up quite a bit in the last few months itself. I'm seeing a $50 billion of inflow coming in just from domestic institutions entering. So Indian equities may not be so much impacted, even if we see some amount of a foreign flow moving into other countries where valuations right now look reasonable. But from a long-term perspective, one should not forget that India is expected to be the fastest growing economy. The average GDP growth at 6.5% is way higher than China and even the world average. So fundamentally, it's a strong country to have your assets from a long-term perspective.
Why do you think foreign investors, foreign funds are still not buying the India story despite all the factors that you laid out earlier? I mean, you know, foreign funds have been pulling money out 4 days in a row, in fact.
Absolutely. So this is one trend that we are seeing that at least in the 2025, we've seen more months of an outflow than inflow. I would also say that to a certain extent, there is some amount of profit booking that's taking place. People are in a wait watch mode to see how the trade, the tariff, the trade pact kicks in between US, China, because the US and India, because the talks have been on. Right now we are listening. Probably in November there could be a trade treaty that comes in. So yes, foreign institutions right now, while they are bullish on the market, they are cautiously bullish, and that's where I would say sitting on sidelines, waiting to enter. If I have to take a 2-3 year perspective, could we see a rebound in these foreign monies coming back into India? Very high probability from my standpoint.
Shweta, thank you so much for that. Shweta Rajani, Anand, Rathi, Private Wealth Management. Now, before we go, here's a look at our guests for tomorrow. We'll be live at the PWMA Wealth Management Summit in Hong Kong for exclusive interviews with BNP Paribas Wealth Management's Asia CEO, as well as the Asia chairperson of EQT. We're also speaking with AmCham Shanghai President Eric Cheung, live from the China International Import Expo in Shanghai. And we get the outlook on real estate from Knight Frank Senior Partner Will Bedmore. That is it for Insight today. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.